Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And on the topic of getting started, before we can even trade or invest, that trader or investor needs to know how to push the right buttons to get their orders going, to do what they want to do with whatever strategy they have in mind. So today we're going to be going through 7 essential types of orders for trading stocks. So these really are the 7 orders that just about everybody should know. We're going to be going through those using an example chart setup just to sort of make the things relatable. A lot to cover, but before we get to any of that, let me first of all say hello to everybody that's already chatting in out there in YouTube. Hello there. Looks like we have Richard and Kevin, Greg, Lawrence, Eva, Life in the Fast Lane, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're among those that are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream has concluded, we'll enjoy the recording, but be aware that you're invited to join us in the live stream if you'd like to be here. This is a Wednesday webcast series, and we kick things off promptly 2 Eastern time every Wednesday. We'd love to have you here in the live stream audience. And as I'd say a special treat for our live stream audience members today, my very good friend Brett Crowther is going to be hanging out in the chats. He's going to be addressing any questions that I can't get to. Brett and I go way, 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 way back, years and years and years, more than 2 decades now. So thanks for having my back there, Brett. It's very much appreciated. I also like to issue an invitation to everybody listening. If you have an account on X, you should be following your favorite Schwab presenters there. It's the best place to connect with your favorite Schwab presenters when the camera's not on. So you can find me on X at Cameron May CS. And if you reply to one of my posts, I try to reply right back to you. It just allows for some interaction that's not otherwise available when the live streams aren't active. So let's get into this discussion. We do have quite a bit that I wanted to cover, but of course, before we can get into trading or investing, even the processes for doing that, we need to understand that risk is real. So bear this important information in mind. All corporate or issuer names and market data shown are for illustrative purposes only and are not a recommendation, offer to sell, or a solicitation of an offer to buy any security. Schwab does not recommend the use of technical analysis as a sole means of investment research. There's no guarantee that execution of a stop order will be at or near the stop price, and investing involves risks, including the loss of principal. Okay, so let's lay out an agenda for what we're going to be talking about today. I want to set up a trade scenario, just a stock trade scenario. This can be all about trading stocks. What are the processes to actually place the orders to trade the stocks? So we'll look at an example stock chart. We'll set up an example trade scenario, what a trader might be looking to do, and then we're going to go do it. We're going to be placing 7 different types of orders. First 5 going to be pretty straightforward, and then we're going to get a little bit fancy, putting in multiple orders on the same order ticket. So by the time we're done, we will have learned 7 what I consider to be essential order types for trading stocks. So let's go right to it. Let's go to the Thinkorswim desktop trading software platform. And as I do, I want to give you a heads up. Matter of fact, I might even pump the brakes and back it up for just a moment, because anytime we're new to something in the world of investing or trading, it might not be a bad idea to practice that thing first before doing it with live money. So for those that are new to Thinkorswim, be aware that there is a practice platform. It's known as Paper Money. You'll also notice up here in the upper left-hand corner, it says simulated trading. That can be a really helpful tool for learning new things like different order types. So just let me quickly show you how to, if you're new to Thinkorswim, how to download it, how to access the Paper Money version. So Thinkorswim is trading software that can be downloaded free of charge from within your Schwab Online account. So you just log into your Schwab account, you go to the Trade tab up here in the upper left and click on that, and then look under Trading Platforms for Thinkorswim Desktop. It's called Desktop because it's going to download some software and add an icon on your computer's desktop, and you launch it on your computer, right? Now, when you go to the Thinkorswim link here on schwab.com, just scroll down a little bit, click on the big button that says Learn How to Enable Thinkorswim, and it'll just walk you through the download process for a PC or for a Mac. All right, so once that's done, it's going to create an icon in the computer's desktop that looks just like the one next to Thinkorswim logo right up here. It's this splash icon. Then you just double click on that, or you can find Thinkorswim in your computer start menu, log in using your your Schwab username and password. But as you do, so when you click on that icon, it's going to pop up a little window that looks like this one here on your screen. Down at the bottom, it'll ask you, hey, Cameron, are you looking to do some real live trading with your actual money? Or do you want to do some practice trading through paper money? So I've just toggled over here to paper money and then just log in. Okay. That'll have you on the paper money platform. That's where we find ourselves right now. So now let's set up a trade scenario and then learn the order that'll get that scenario put into action. Right. So here we're just looking at an example chart of Bristol Myers Squibb. This is looking back over the last 6 months. And let's say that our trader is among those that are sort of chart-oriented technical traders. And maybe what they've noted on Bristol Myers Squibb is that it seems to be trading in a range down, hitting lows or a price floor around $42.50, and then rising up to price ceilings and reversing somewhere between maybe 48.5, 49.5, sometimes coming a little bit shy of that, closer to 49 or 48. So let's say that our trader notices with this recent sell-off on BMY, we're getting kind of close to that price floor. And for some, let's say that our trader has just decided, you know what, close enough. It'd be nice if I could buy it right at exactly 42.5. But even if I'm buying here closer to 43.5, if the stock reverses, as it has over the last several times, it's been down in this range, maybe it'll climb back up to 48, 48.5, maybe even 49.5 if we're a little bit more aggressive. But bottom line, let's just say that our trader wants the shares and they want to put in an order that will give them the greatest likelihood of a quick fill to purchase those shares. Well, that's going to bring us to the first of our order types. And let me just outline them here. We're going to be learning market orders. We're going to be learning limit orders. We're going to be learning stop orders. We're going to be getting a little bit fancier and talking about stop limit. Let me throw a 4 on that. We'll also learn about something called a trail stop order. And then we're going to be putting in multiple orders on the same order ticket using something known as a first triggers sequential order, and also a first triggers OCO order. So let's start right here with the market order. This is the order that a trader will typically go to if their priority is to get that stock right now. Now, no order delivers a guarantee that it's going to fill immediately or at the price that the trader wants, or a combination of those two things. But this one just has the highest probability of a quick fill. So let's go to our trade tab. Obviously, if we want to place a trade, we're going to go to the trade tab, make sure that we've typed in our symbol here. And then in order to place a buy order or a sell order, we're going to be using the prices under the bid price or the ask price on Thinkorswim. If we were buying something out there in the universe, let's say we wanted to buy a car or a house, we might go up to its owner and say, hey, how much are you asking for that? And then you pay them what they're asking. Well, same thing applies to stock trading. We pay the ask price most commonly. On the other hand, if we wanted to sell something, sell a house, sell a car, sell a stock, we might ask, hey, how much will somebody bid for this thing I have for sale? And then we sell to the highest bidder. So that's the way that I think about these two terms, bid and ask. Buyers typically pay at or near the ask price. Sellers typically sell at or near the bid price. And there's usually a little bit of a difference between the two with stock trading, a penny or two. With less liquid stocks, it can be more than that. But in any case, so to create my market buy order, I'm going to come to the ask price and click on the price just below that. And that actually creates a buy order right down here. So I'm going to hide my order types for just a moment. There's a little toggle here right at the margin between our left column gadgets and the rest of the platform. So I'm going to hide using that toggle. Click on the little arrow. And let's put in an order to buy, let's just say 10 shares of Bristol Myers. So one thing that we should know is that we can use the plus or minus to go up or down in increments of 100 shares. Now, we're not required to trade in what are called 100 share lots. Instead, we can also alternately just type in the quantity that we prefer to buy or sell. So I'm going to do 10 shares for this example. And then really, to customize the rest of the order, in order to place a market order, the only other thing that we might need to do is switch the order type from a limit order, that's the default, to a market order. Market order, this is where that terminology comes from. If you're paying the market price for something, it just means that you're paying essentially the going price for that thing, whether it's a car or a house or a stock. Yeah. So if we enter an order saying, hey, I'm willing to pay the market price, whatever that happens to be at the moment my order reaches the front of the line with whatever other orders are out there, that gives us a high probability of quick execution. And that is compared to other order types that we'll be discussing today. But there's a downside to this as well, because if we say we're willing to pay whatever it takes to get into the shares, we might not like the price that is ultimately paid. So right up here, I can actually see what Bristol Myers is currently trading for. Looks like about 43.44. I'm going to do a little bit of rounding. There we go. It rounded itself for me. Am I guaranteed that that's the price I'll pay? Nope. Let's see what we wind up paying. Just to illustrate this point, I'm going to click confirm and send. We're going to put in an order to buy 10 shares of Bristol Myers at the market price. Now, there's no commission on this trade. There are going to be no commissions on any other trades that we'll be placing today because they're all going to be stock trades. But on some types of trades, there can be commissions. But on this order confirmation dialog box, this is the last opportunity to turn around and go back and not actually place the order. We haven't committed to anything yet, but there's a reminder right down here. When we see a red bar down at the bottom, we want to make a habit of reading that red bar. It's highlighted in red because it's important information. In this case, it's a reminder that with market orders, prices can change quickly, especially in fast market conditions, resulting in execution prices. In other words, the price that we pay in this case that can be different from the quotes displayed at order entry. So we're seeing 43.44, but if news comes out at the moment we hit enter and all of a sudden that thing starts to sprint upward, we might wind up paying a higher price than what we were originally planning. In any case, let's click send. And our market order is waiting for confirmation to fill. There it is. We just bought shares at 43.46. Hey, what do you know? It wasn't the price that we were seeing at order entry. We paid the market price. Turned out to be 43.46. All right, so that is a market buy order. All right, now let's say in this case, maybe our trader has immediate buyer's remorse, or maybe they just have a different view of the chart. They see something differently. For whatever reason, if the trader has concluded, oops, or hey, it's time to get out of this stock, they may choose to enter a sell order that's also a market order. So I'm going to do that here. So I'm going to stay here on the trade tab. There are a number of different ways we can enter these orders. I'm going to be placing most of them probably right here on the trade tab. But in order to place a sell order, we just make sure we're doing it in the same account where the shares are held. And we can click on the ask price, on the bid price. So obviously, as I explained, we're going to use the bid price anyway. We're going to click on the bid, and this creates an order to sell shares. Now we own 10. Let's say that we want to sell half of those. Let's retain ownership of the other 5. Let's put in a -5 to sell shares of BMY. It's a stock. And in this case, we're going to switch the order to a market order, meaning again, I don't care what price I get. I just want to get out. I'm willing to accept whatever the market offers. Now, with both of these, I'm leaving this TIF, that acronym stands for time in force. I'm leaving these at a day order. What this means is we want this order to fill today during today's trading hours, or we'll just cancel it. Right? But let's submit this market order to sell. Click confirm and send. This is a simulation, not a real trade. No commission. But there's that reminder again. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. Let's send that order off. Price right now is 43.47. If we're able to pull that off, we'd make a penny. Let's see. Let's click send. We don't know how much we're going to get when we submit a market order. We're now in line waiting for our order to fill. And when it does fill, we'll get a pop-up right up here in the upper left. Oh, look at that. Sold it for $43.46. That's a break-even trade. There were no commissions. That's a non-event nothing burger. Okay. But we do still own 5 shares. And let's go forward with some new trade assumptions. Okay. Somebody just says, please explain the difference between mark and market. Well, mark is actually an abbreviation of the word market. So when we see mark, that the way that I think about that is that's the current market price of the stock or the whatever it is we're trading. Okay. So really not always a difference when it comes to orders. It's a market order, not a mark order, just a market order. Yep. It's not even such a thing as a mark order. All right. So now let's set up a different trade scenario. Let's say that our trader sees that price has been coming down, but they're not satisfied with how far it's come down yet. They'd like to get in closer to 42.5. They don't want to wait for it. So maybe they've concluded, you know what, I'm not going to demand that we get all the way down to 42.5, but if we can just get down to maybe 43, that might be close enough. That might be among some of the best prices paid in the last 6 months. So I'd like to buy down here. So let's go put in a buy limit order to potentially accomplish that. Potentially is a big word here, but I'm going to go to the trade tab. I'm going to put in an order to buy. Let's see if we can, let's buy 5 more shares. Okay. Now in this case, putting in an order to buy some shares of BMY, but not at the current market price, but at a limit price. The limit, think about it this way. When we put in a limit order, we're saying, I want this price or better. That's my limit. The most I'm willing to pay is $43. Now, in this case, I might change this to a good till canceled order. Here under time and force, instead of just requiring that we get down to $43 today, or I don't want the trade, well, we might put in a good till canceled order. So if it gets there tomorrow or the day after, or sometime after today, well, it might even include today. It does include today or sometime later, then we'll buy those shares. But we're putting in $43 is what's known as a limit. Just literally means I want this price. I'm not going to pay a penny more. That's my limit. Now, if price happens to fall quickly, we might actually wind up getting it at a lower price than that. Just because we've said we're willing to pay as much as $43 doesn't mean that we have to pay $43. It might be less than that, but it just won't be more. All right. So let's click confirm and send. We're putting in an order to buy 5 shares at $43. And it gives us a little estimate of how much that would cost if we wound up paying $43 per share on 5 shares. That's $215, no commission on this trade. Then I could send that off. I'm not actually going to send this one off now. I just wanted to show how that might be done. Okay, so that's known as a buy limit order. There are times when a trader might choose to enter a sell limit order. Okay, so let's go outline an argument for that. Let's say that our trader already owns the shares. Hey, what do you know? I already own 5 shares. You saw me do it. Bought 10, sold 5. That leaves me with 5. And let's say that trader, instead of waiting to buy shares, they already own the shares. Maybe instead they're waiting for the price to run up. And how about for this one? Let's say that our trader notes that we came up just short of $48 on a couple of occasions recently. This one really came up to about $47.90. Maybe they're trying to get up there. Sure would be nice if we could get up close to that. Let's even peel off a little bit. Let's say that we'd be willing to sell if we could get out for $47.80, not a penny less. We're trying to get that upside potential. Well, this would be a sell limit order. So let's go put in that trade. Go to the trade tab. Click on, make sure that you have your symbol entered. Click on the bid price. That's how we place our sell orders. Make sure the quantity matches the quantity that we intend to sell. In this case, we have our 5 shares. And we're going to enter a limit order, but instead of entering at a price lower than the current price, this is a sell order to sell at a higher price. And what did we say? Was that $47.80? Yeah. $47.80. And I'm going to put that one good till canceled. What we're telling the system here is, I want to sell for at least $47.80. That's my limit. Not willing to sell for a penny less. If I can sell for more, great, just not less than 47.80. And I'm willing to do that at any time from this moment until either my order fills or I choose to cancel it. So that is our limit order. So then we can click confirm and send. We get one last opportunity to read through, make sure that this is what we want to do before we commit to it. We're going to sell 5 shares of BMY with a limit of 47.80, good till canceled. And then I could send that order off. Again, I'm not going to here. Yeah, okay, Jim says the real abbreviation for market is MKT, not mark. Okay, that's fine, Jim, but that's accurate if we're talking about grammatically correct. On Thinkorswim, though, you will see the word mark used here and there and all over the place. That useful to just think of it as abbreviation for market. But yeah, if we're being grammatically correct, if you or I were in charge of the engineering of the phrasing on Thinkorswim, we might have gone with MKT. In any case, let's cancel this one. If instead of sending the order, I just click the X and delete, no harm, no foul. That order has not been submitted. All right, so we still own 5 shares with no sell order attached. So we've learned a market order, we've learned a limit order, we've learned each of those for buying and for selling. So now let's talk about a stop order. In this case, I'm just going to look at it from the buyer's perspective. Okay. So we own 5 shares of stock. It's been a tough day for owners of shares. As a matter of fact, it's been a tough last couple of weeks, and it's possible that even if the stock goes down, maybe it doesn't stop going down at 42.5. What if it keeps going down further? Well, in that case, some technical traders might think, uh-oh, our floor didn't hold. This isn't what was supposed to happen. Maybe I shouldn't own these shares. Maybe what I want to do is stop the bleeding right there and get the heck out of this. So this is going to be our stop the bleeding trade. And let's say that if we break down below 42.5, how about we just say at $42? There has not been one time all year where the stock is traded as low back away from that. There's not been one time in the last 6 months where Bristol Myers has traded as low as $42. And for some, that might signal, boy, this is heading in entirely the wrong direction. Maybe they don't want to own those shares anymore. So let's go put in a stop order. So to do that, go to our trade tab. This is a sell order, so we click on the bid price. We're going to put in the correct quantity, minus 5 shares. And in this case, we're going to choose stop. Stop the bleeding. Stop the bus. I want off. In this case, we're just going to put in $42. And do we want that to be good for the day? So if it happens to fall down below 42.5 today, then we're covered? Or do we want to set that for good till canceled? Yeah, we're going to choose good till canceled and click confirm and send. Now, there's an important reminder here. Pardon me. Whoa, pardon me. Peter says, if you don't get full, how long will this be on for? Fulfilled? So good till canceled is good till canceled. That the trader chooses to cancel it, or it's good until it's filled. So good till canceled is good until the order is filled or canceled. Good question. All right. Now, again, no commission on this stop order, but there is an important reminder down here. With stop orders, there's no guarantee that the execution price, the price that's ultimately received, will be equal to or even near what we call the activation, or sometimes called the trigger price. Our activation price is $42 in this case. So we're saying if the price happens to fall down to or below $42, get me the heck out of this trade. So the actual mechanism that happens here is if the stock price falls down to 42, that fires off a market order at that point. And a market order could fill at 42. Could fill at a price lower than 42. It's even possible maybe we just come down and hit our activation price, and in that moment the stock starts going back up again. Might sell for more than 42. That's less likely. More likely we sell at or below 42. Okay, so then we could send that order off. Again, I'm not going to, but that's how a stop order might be entered. All right, now back to our chart. And let's get acquainted with some different, we're getting a little bit fancier here. Some traders will use a combination of a stop and a limit order when selling a stock or when entering a sell order. Let's say that our trader has decided, you know what, if this does get down to 42 bucks, I want to get out. But if it's falling really hard, maybe I'd prefer to just hold on, because if the stock gaps down, sometimes stocks will just rally right back up from extreme sell-off events. And so maybe our trader would prefer to just hold on at that point. So they may put in what's known as a stop limit order. It's a combination of a stop and with a sell stop and a sell limit. So as an example, let's say that our trader says, all right, if it falls below 42, I want to sell. But if it's already dropped below 41, I'd rather just hang on. So that would be a stop limit order. Let's go show how that might be entered. Click on the bid price to create our sell order. Make sure our quantity is correct. And from our menu here, we're going to choose stop limit. This allows us to put in a stop price. We'll put it at 42. But pardon me, our stop price is at 42 and our limit is at 41. Okay, let's make sure that's a good till cancel order. So what we're doing here is we're putting in an order to close out this trade if the stock price falls down to 42, but not if it falls below 41. Now, can you see the risk in doing that though? What we've just signed up for is if the stock happens to have a big gap down day, and if it goes down below 41, yeah, it triggers the stop, but our limit isn't met. We can't sell because it's still below 41. And we've said 41 is our limit. We're not willing to sell below that price. If the stock continues on down, we might be off on our having a weekend or a vacation thinking that we're covered. And this trader is exposed to more and more downside risk. The order did not sell. Okay, so that's known as a stop limit order. There are pros and cons to that approach. In any case, let's get on to what's known as a trail stop order. This one, some traders like this as sort of a hands-off approach for a stock trade that's doing well. Let's go to our chart. And let's say we want to put in a sell order. Now we're getting back on the more positive side of things. This is for managing profits. We were just talking about managing the downside of stock trading. Now we're talking about the upside. So here's a potential trade scenario. Let's say that our trader was right, and our stock starts to rally up off this close to the price floor low, and it starts making its way up toward our target, but it doesn't get there. And then it starts to fall back. And let's say they have a stop order down here at 42 bucks. Eva says she loved trail stops when she used to use them. They're very efficient. They can be efficient, but obviously there are pros and cons to each type of order, and we want to talk about those. But here's what our trail stop user is attempting to avoid. If our stock runs all the way up to here, let's say it gets up to 47.5. But our sell order is all the way down there at 42. What has just happened to the per share risk of this trade? It's really gone up. Shares are worth 47.5. We don't even have a sell order that would kick in until it's all the way back down to 42. Sure would be nice if that stop had just trailed up behind the price. And actually, that's exactly what we can set up here. Bob says, please explain the meaning of selling a negative number of shares. My apologies, Bob. I think what you're hinting at, selling a negative number would actually be net buying, and I don't think that you intend that. But selling shares you don't own is an entirely different animal. That's known as selling short, which is a bearish stock trade, which can benefit if the stock goes down, but stocks have a tendency over time to go up. And how far can they go up? How wrong can a short seller be? There's unlimited risk potential in that trade, that sort of trade. So that's my quick comment on that. I don't want to go further than that because it'd be going too far off this topic, but it's a good question there, Bob. Anyway, so here is what our trader might do with their trail stop. They're going to put in a sell order that will automatically move up if price moves up. It doesn't move up unless price moves up. And it never moves down. It only moves up. And if stock price starts to come down again, it just stays where it is. And let's look at recent history on this stock. You'll notice these last two times it ran up to 48.5 or higher. And this time, well, actually here it just went straight up. But in any case, typically a stock doesn't just go straight up. Usually it'll go up and back and up and back and sort of stair step its way up there. And so let's allow for that. Looks like, here we started making our way toward that 48.5, but there was a pullback right here of about $1.50. All right. So with our entry, we just bought shares for about $43.50. What do we pay for it? $43.66 or $43.56, something like that. If we have our stop down there at around 42, it's about $1.50. Okay. Well, I want a little bit more wiggle room than $1.50 in case the stock runs up and then it pulls back $1.50 and then goes higher. Let's put in a trail stop $2 below our entry price. All right. So what was our entry price? Let's go remind ourselves. Let's go to the monitor tab. Let's find our BMY. If we click on the 5 shares that we own, okay, we bought our shares right at 40. It was 43.46. Nice. We're actually making a little bit of money. Anyway, about 43.5 though. Okay. So I'm going to go to the trade tab and let's click on the bid price. And instead of just putting in a limit order to sell, a market order to sell, stop order to sell, we're going to put in a trail stop. And I'm going to put that at -2. This literally means -$2. So what this means is we're going to put in a stop that's $2 below the current price of the stock. We paid 43.5. It's at 43.5 right now. Let's put that in at $2 below the current price, but it's going to trail up if price goes up. So do some math for me. What if this went to 44? Where would our stop automatically be if we enter a trail stop? It would be at 42, $2 below the highest price since we placed that trail stop. If it then goes up to 40, let's just go back here to our chart so we can visualize this a little bit more. Let me remove this drawing. So this is where we are at now. If we go to 44, our trail stop is now at 42. If we go to 45, our trail stop is now at 43. If we go up to 46, our trail stop is at 44, and so on. So if we happen to run, let's say we ran up to 46, and then the stock started to fall, our trail stop would already be at 44, and it would stay there. Trail stop does not retreat from price. It follows price up, not down. So we'd have our stop at 44. So if we did this, if we ran up to 46, and then let's say it pulled back down to 45, our stop would be down here at 44, not triggered, but it's still well above where our initial $2 stop was. And then if it moves up higher, our stop moves up as well. So that's what Bob says, yes, you said 5 shares. Oh, no. Okay, Bob. Yeah, sorry. Going back to Bob's question, please explain the meaning of selling negative numbers of shares. So Bob, literally that's just a reminder that it's a sell order. When you see a -5, it just means it's a sell order. It's not actually selling a negative number of shares, it's selling 5 shares. Okay. So I know that our basic math would say, hey, if we're selling a negative, isn't that a positive? It's not selling a negative. It's just saying -5 means we're selling shares. Okay. So that's a trail stop. How do we place that? Let's finish our order. So let's place that at -$2. We could do this as a percentage, by the way, but I'm going to put it as a dollar amount and make that a good till canceled order. Now, if we click on this little button right here, we could put it like a couple of percentage points below our current price, or 3 or 4 or 5, whatever the trader wants to do. Let's leave that at $2, trailing price, good till canceled. Click confirm and send. We're going to sell. Oh, guess what? This pop-up menu is reminding me, this is why it's always a good practice to read through our order. It says -100 shares. I don't own 100 shares. Speaking of getting short, Let's change this to -5. There we go. Confirm and send. Selling 5 shares of BMY with a trail stop. The mark price, in other words, market price -$2. Apologies to those that are kind of grammatical hardliners who might prefer that it say MKT. It doesn't say MKT. Anyway, no commission on this trade, but as with other types of stops, there's no guarantee. With a trail stop, there's no guarantee that the execution price will be equal to or even near the activation price. Then we could send that order off. So that's a trail stop. So those are 5 individual order types that we've now learned, but we have a couple of others that I wanted to introduce you to. We've done market, limit, stop, stop, limit, trail stop, but we don't have to put in orders sequentially. In other words, I don't have to place a buy order, make sure that it gets filled, and then put in a sell order. We can actually put those on the same order ticket. For example, let's go to our trade tab. Let's dump our BMY shares. I'm actually going to show you a different way to place an order. We can right click on our order from the monitor tab, right click not on our order, but on our position, and create a closing order from there. And I'm just going to choose sell those 5 shares. All right, here, I'm going to choose a market order to sell them quickly. This improves the odds of a quick fill, obviously, market order being what it is. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. But let's sell those 5 shares and just go back to 0. Send. Okay, so as that's working to fill, there it is, sold those shares for $43.49. I think we made 3 cents on those. Let's say that our trader, let's clean up our chart. Remove that drawing. Let's remove this drawing. Let's remove these 3. Just sort of tidy things up. Now, let's say they want to buy those 10 shares that we had originally, but they prefer to just put in the stop order right up front. Well, for that, we could use an order type known as a first triggers sequential order. Let's go to our trade tab. And in this case, we're going to right click either on the bid or the ask. It actually doesn't matter. If we right click on either one of those, we get this menu that allows us to put in a custom buy order. And in this case, we're going to do a custom buy order with a stop attached. So this creates 2 orders where we can place an order to buy and place an order to sell. I'm just going to tailor the quantities there. And we could put in, for example, a market order to buy shares at the current market price and then attach a stop. So let's make sure that stop, let's say that our stop is at $42. Yes, we could make this a trail stop if we wanted to, or a stop limit order if we wanted to. But I'm just going to make this a good till canceled stop order. So we're just putting both orders in at the same time. And this is known as a first triggers sequential order. By default, it would just be a single order. I'm going to choose a first triggers sequential order. Well, first triggers all actually would accomplish the same thing. Just if we wanted to attach more sell orders, we could do that. But first triggers just means if the first order fills, so it's an if then. If the first order fills, it triggers a sequential order to go into effect. And that sequential or that second order is going to be the sell order. So then if I click confirm and send, I can put in an order to buy some shares and an order to sell those shares down at a stop level of, in this case, $42 that is triggered by order number 1. It's dependent upon order number 1 filling. No commission for either one of these. There are reminders at the bottom with market orders. Prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. And with stop orders, there's no guarantee the execution price will be equal to or near the activation price. And I could just send that order off. And if it fills, we'd have our stop in place. That is if we just had a plan for the downside. Well, you might think, well, Cameron, what if our trader wanted to put in an order to buy, and then they want to put in 2 sell orders? One to take losses if the stock misbehaves, but the other one to take profits if it cooperates But we don't want to sell under both conditions. We'd wind up selling shares that were profitable. And then if the stock turned around or vice versa, we might see, we might sell the same shares multiple times. Selling shares that we no longer own, that's a short position. So we're going to put in 3 orders on one order ticket. Okay. So let's go to our trade tab. How about we just have a plan? Let's buy some shares, sell if they happen to fall down to 42, or sell if they happen to rise up here to 47.80. Here's how that might be entered. Let's go to our ask price. This is going to create our buy order. Let's put in an order to buy 10 shares at the market price. But I'm going to change my order type here where it says advanced order. I'm going to change that to a first triggers OCO order. This is going to allow us to put in the 2 sell orders. So here's how to put in those 2 sell orders. This is just a different way to put in this multi-legged order. Now we can go up to the original buy order and right click on it, and let's create an opposite order to put in our order to take profits. Do that again. Right click again and create an opposite order to put in an order to take our losses. So to take profits, that's a limit order. Let's enter this first sell order as a limit. To take losses is a stop order. Let's put in a stop order to take those losses. And then we just plug in the numbers. 47.80 as a limit. $42 as our stop. Both of those good till canceled because they're unlikely to get there today. So we'll make those both good till canceled and then click confirm and send. And we're going to buy 10 shares at the market price right now. Then have an order to sell if prices rise to 47.80. And if that's what happens, that one order cancels the other order. Order cancels order, one cancels other, OCO. Okay. If it happens to fall down to $42 and we sell and take the losses, and that would cancel the target or the limit order. All right, so now our final reminders: with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. And with stop orders, there's no guarantee the execution price will be equal to or near the activation price. Let's send that off. I'm going to let that one go. There we go. So we're going to send that off. We just bought some shares at $43.52, and there are now 2 orders waiting. Up here under our working orders, we can see an order to sell at a stop of 42 or sell at a stop at a limit of 47.80. Guys, we've accomplished what I set out to do today. I intended for this to really just be sort of a beginner level introduction to 7 what I consider to be essential order types that pretty much every trader should know. This allows, when a trader conceptualizes a trade, they can put that trade into action. Now, obviously, it's not a sales approach or it's not a sales pitch for a specific approach to trading, but I think these are important orders that we've now acquainted ourselves with. Nice thing about these webcasts is they are recorded and then posted to our Trader Talks channel after the webcast is concluded if you need to go back and revisit any of these types of orders. So as I let you go, just remember to make sure that you're aware of all of the educational resources that are offered to you free of charge from Schwab. Number one is, if you haven't done this already, make sure you subscribe to our Trader Talks channel on YouTube. It's known as Trader Talks Schwab Coaching Webcasts. But this is where we host our live events, our live webcasts, but you can also find the playlists for previous webcasts or webcasts that have been concluded. So for example, if you wanted to find last week's webcast for this webcast series, just scroll down all the way to the bottom. This webcast series happens to be the last one among our playlists. You can click on View Full Playlists, and there it is. Last time we had a step-by-step guide to the chart settings tools on Thinkorswim Desktop. Another suggestion that I have for you is to follow me on X. It's the best place to connect with me in between these live streams. You can find me on X. My handle there is @CameronMace. Give me a follow. It doesn't cost you anything to do that. But if you reply to one of my posts here, I try to reply right back to you, and allows for interaction that's not available otherwise. There's no other place to interact with me um, outside of the live streams. All right. So, Brett, thanks for helping out in chat. Everybody, definitely appreciate your attendance today. I noticed that 128 people still watching right now. And how many of you have already clicked that thumbs up or that like button? 53 have already clicked the like button. Thanks for doing that. That always sounds like applause to me. It's a nice pat on the back for your presenter. But it also gives my videos a boost in the YouTube algorithm, helps more people find them. So always helpful. Doesn't take any time at all. It doesn't cost anything to click the like button. So thanks for doing it. I will see you in a future webcast, everybody. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.